Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to go over today our commodities technical analysis update. I'll give you my financial opinion. I'll walk through the dollar, 10-year yield, and walk through a bunch of different commodities and precious metals, giving you my opinion. So we're going to do that here. I'll describe why it's important going through it. And we're going to jump right in with the dollar first. The DXY, I call it a relative strength currency indicator. But we've been heading a little bit lower in the dollar. Is this a top where we're going to see a dollar roll over here and just start to beeline lower? It very well could be. And we saw that in the middle of the last bull market, 2002 and onward, we saw a declining dollar. We also saw a declining dollar in the 80s. And even before that, in the 70s, we had a declining dollar all the way to about 1980. I think we're going to see a declining dollar at some point. This is going to roll over. This could be in the process of rolling over. And we see that dollar decline based off of the market conditions that we're at. And that's going to be driven by inflation in the currency system from more loans from the housing market. And then it's the transfer of money into commodities and that rotation of money from financial investments into other things. And when it crosses over into those other things, it's got to transfer through the dollar first. I think that's the process of this going on here. And then eventually that money is going to be deployed into precious metals, commodities, and other things. The 10-year yield is rocketing higher today. So we've got these large candlestick up days in here. 1, 2, 3 with no selling pressure. This to me looks like we want to go higher. I know that they want to keep this in a controlled manner, probably around where it's at. But the markets want it to go higher. People are dumping their bonds. And I'll show you that in the next chart of what that looks like. But the yields, this is yields, are going higher. And what that means is that I think we're going to see energy prices continue higher as yields and energy prices are linked. Remember, this back here is when they released it in March. As this started to go up, they started to say, hey, look, we're going to release a bunch of barrels of oil onto the market. That is disinflationary because they're trying to control the price of oil. They're trying to slow the price of energy down. That worked for a short period of time, but I do think that they're losing control and that this could potentially head higher on the 10-year yield, which means that oil is going to go higher. This is all interconnected. TLT, which is the 20-plus year Treasury bond ETF, this is the price of bonds. Yields go up when the price goes down. And we can see that TLT is heading lower. We had a rising wedge here that broke to the downside, and we're seeing yields go higher, bond prices go lower. And this here does not look good. This looks like bond prices are going to continue lower. This is a bearish engulfing pattern where I think we're going to head lower. What does that mean? Higher yields means that people are afraid of inflation. They are dumping bonds. Bond prices are showing us this, and yields are going higher. So I think yields are going to continue higher. And if we break this resistance line in this yields, that white line, we could see a substantial move higher in yields. What that means is we could see a substantial repricing of bonds lower. This is great for our commodity and precious metals bull market because money is rotating out of bonds. They are selling bonds, and they're going to come rotate into the stuff that we're hanging out in. It's all part of the rotation of money. And CRB index was up today, up 2%. Again, we're getting a little bit more buying pressure, and it's accelerating. You can see those candlesticks get larger and larger from the opening and closing prices. Your opening price and your closing price. It's getting bigger between this distance than the ones before it. It is accelerating to the upside, the CRB index pricing. And we are still above this long-term support line. We just got a little bit too much away from that support line where we came on back a little bit, had a little bit of a cool off period. Everyone was going, oh no, I should sell my commodities. It's a recession. We're going to have a depression. The housing market's going to crash. Oh no. I don't jump to that emotional state. It's like, just stay calm. We're above the support level. We've come on back. We've cooled off a little bit. Now we're starting to heat up again. Gold, remember, we had a little bit weaker dollar, but a higher yield. Gold doesn't necessarily like higher yields. Neither does silver. Silver, they kind of live in that. I think they can go up, but people are going to have to get scared into it. Platinum does well in these types of conditions. I think we'll see a breakout of platinum and get a nice big run out of it. That's where I'm positioned. But I think eventually, gold and silver will find their base here, the inflation come into the system, and they will start to move at some point when people start worrying about the currencies. But we are sitting in a very good location for both gold and silver. Broken down trend line. We're starting to move on up. The downtrend line that I'm talking about is that one there. So we've got a downtrend line. We've got a nice other downtrend line, and we're starting to move higher. We could get a return move out of this. That is not out of the realm to get a return move. So we could come back into this general vicinity and then bounce higher. XAU to gold ratio. So this is the ratio. We're still looking okay. We had a little bit of a pullback today, but we've broken the downtrend line. The opportunity is when you break the downtrend line and you're down here. So that still looks good. SILJ selling off a little bit, still above support, broken downtrend line. And GDXJ, broken downtrend line, still looks good. We're just getting a little bit of a pullback here. So that all still looks good. Crude oil rocketing higher today. So we hit this long-term support level. If it wants to load here, there's our long-term support level that we're using as a support level. We're hitting that, and we're starting to come back up. That's good. It looks strong, and I was waiting to see if this would hold down here, or if they were going to dump a bunch of oil onto the market to try to push this lower in the short term. That's still a possibility. It still is. But when they are done releasing the Strategic Petroleum Reserve releases, I think we're going higher here. We also have support resistance line that we're breaking right now to the upside. So that's also another positive here. We just got to see if we can hold up here and continue this momentum. Natural gas rocketing higher today, up 7.1% or 7%-ish. Is this going to pull back? And guys, this has been quite volatile over here. It's got me twisting, turning all about. I don't know which way this thing's going to end up rolling here. The international pricing is ridiculously high. I have not sold a single thing in oil and natural gas. I think a crisis is still alive and well, is what I'll call it. But we've had some massive volatility here in natural gas in this entire area. We got some more buying pressure. Freeport LNG facilities coming back online in October, 100%. The opportunity's there. Are we going to get this one last pullback that I'm hoping for so I can load up? I don't know. And that's why I don't trade in and out in the short term. We're getting lots of volatility through here. It looks very strong. We'll see where this thing ends up. And it's okay if we run. I'm already kind of loaded up in it. And I'm not selling anything. Here's XOP. Yeah, you know me. We had these two strong down days. We had a bullish piercing. And then we had weak buying pressure coming up. It's like, man, is this thing going to roll over? And then we've got buyers coming in, rocketing it higher today. That's why I don't trade in the short term. We could see this run to the upside. Yields, remember, this is all interconnected. The yields and bond prices. So yields going higher, bond prices going lower. People are rotating money out of bonds. That money's got to go somewhere, and I think it's preferring oil. Some of that money. Some of it's going to go to precious metals. Some of it's going to go to oil. Some's going to go to other commodities. Some could go to real estate. And we're seeing that resiliency in oil, although they're dumping barrels of oil onto the market from the Strategic Petroleum Reserve. That's going to be a booster for us in the future for higher oil prices when inventories are even lower worldwide. OIH is bouncing higher here too. That's really good. There's probably some good opportunities in the energy service sectors. We are using this as support level. and this could go higher here. So OIH is actually looking quite tasty down here, is what I'll call it. Scrolling down to uranium. So uranium, the futures pricing, I've got a flat pricing. But if we look at the Sprott Physical Uranium Trust, again, I would not get discouraged with this movement here. We were down today. Whoop-de-doo. We've broken the downtrend line. We've got support underneath us. We've got large buying pressure ahead of it, small selling pressure. That's going to work its way higher, I think. So I am still very bullish on uranium and anything uranium related. We've got good buying pressure down here, bullish engulfing, come up, small sell-off, come up, and we're just dilly-dallying sideways. This is going to go higher over time, in my opinion, based off of the candlesticks, based off the downtrend line break, based off where the support is, and we're basically angled upward in an upward slant. That's ultra bullish. All of this is angled on an upward slant. Higher lows, higher highs is what I mean by that. CCJ, it's got the same thing. We've got one big bullish engulfing with small little pullback. That wants to go higher. We're just waiting for the buyers to step in here and give us the signal to go. So, and that's a broken down trend line. So everything is still intact. Uranium looks excellent. A lot of investment opportunities there. Now, TAN's selling off a little bit. We could see a little bit more selling pressure in the short term, but we are still sitting on top of a pattern. So even if we pull back a little bit, I think we're going to head higher. So we could see short-term weakness before, a little pullback before a move higher, I think is possible. COPX, looking at copper, getting a little bit of momentum lost today. We were still up, but momentum was basically sideways. Broken down trend line, still looking good though. Overall, short-term momentum is higher. So that looks good. Look at the CRB to S&P 500 just to kind of pull that up. Looking at the ratio here. We've dipped on down a little bit below. I could drag this line and cheat it, maybe down like this and bring this down like that, where we're still kind of getting this falling wedge in shape. Bigger picture view to show you guys what I'm seeing in the CRB to S&P 500 and what my opinions are on this. So we've had this big downtrend. We've broken that downtrend. Wave one is that first impulse move higher. We're going to get a wave two, which is your pullback. Now, I'm not saying that we're necessarily done with the pullback. We very well could be done with the pullback. It's going to be soon. And then we're going to go into a massive wave three move that's going to be much larger than wave one. And I might not have drawn this to scale. It could be much larger, where you have multiple waves in wave three. That will come, I think, after this. I think that the energy crisis is not behind us. It's still ahead of us, and it's getting worse in Europe. What that means is that money in the system that is entered through inflation will be transferred into commodities through the price of energy. And right now, we could see this relax a little bit because they've released strategic petroleum reserves. They've lowered energy prices for a short period of time, and we'll eventually see that in the numbers at some point. But they haven't fixed the problem. It was all Band-Aids. We're going to rip those Band-Aids off, and we're going to get a wave three move where energy is basically out of control in their view. It's going to go much higher because we're not releasing strategic petroleum reserve. We don't have those barrels in inventory like we did before. Scrolling down to the rare earth metals ETF, this guy is still broken out of its falling wedge and it's moving on higher. Looks fantastic. Lithium also broken out of its downtrend line, moving on higher. Still looks good. The S&P 500 moving sideways a little bit today. It's not a huge reversal candlestick or anything like that, so we'll see where it goes. And then looking at the U.S. Composite Index, which is the NASDAQ, we were slightly down 0.58. This is a bearish engulfing. We could head a little bit lower in the short term. We could head a little bit lower. And I don't suspect this to do some massive rally. I think what's going on is this is just a relief rally. And then when interest rates go up, it's going to be a headwind to the S&P 500 and the U.S. Composite Index. So we got to be watching that 10-year yield. Emerging markets, weaker dollar. Emerging markets usually firm up. I think this is a good spot to be looking for alternative investments to dollar-based stuff. XHB, the Home Builders Index, we were up a little bit, little wick at the top. We'll see what interest rates does to this index or ETF. Lumber moving down a little bit today, not too bad. Cocoa futures remaining robust, heading higher in the short term. So that's cocoa futures there. We've got wheat. Wheat's been firming up here. I think we're going to go higher in wheat. That looks very good. Broken down trend. Soybeans looks like it wants to go higher here. That's looking strong. And corn is also looking strong, moving to the upside. Copper looking strong as well. That momentum is continuing to the upside, broken down trend. The next thing that we got to set our eyes on is that $4-ish level that we got to break and close above is kind of our next resistance area. Moo's looking good, up 0.67%, broken down trend line, still looking good. That's Moo there. Aluminum also firming up a little bit, moving higher. This is finding a bottom, and I think we're going to move higher here in aluminum. Looking forward at the Baltic Dry Index. Baltic Dry Index is trying to put in a bottom. This does have a lead-in pattern type movement for a bigger move behind it. So the Baltic Dry Index looks good, and there's some investments there that are starting to turn around. And maybe we'll talk about that during this week's question and answer session. So we do have a question and answer session for the Finding Value Platinum members. Description link below if you want to look at the website and join to be a Platinum member. Question and answer session Saturday, 7 a.m. Mountain Standard Time. And you can ask me directly whatever questions you want. There's a lot of opportunities, investment opportunities out there right now. Things are starting to turn around. They're putting in bottoms, breaking down trend lines. That's when usually you want to get some investments in there and ride this stuff higher. Surprising how strong natural gas has been. I thought we could get a little bit of a pullback here this fall, but with the Freeport LNG coming back online, we may not get that pullback. I was hoping for one so I could load up, but I've remained long in all my positions. I haven't sold anything, just been adding and adding and adding, and I think there's other opportunities out there right now. Remember, there's a bunch of soft commodities that are firming up over there, so that's also some opportunities, perhaps in fertilizers or something like that. So that's what I've got for today, guys. And hopefully you've enjoyed it. Give me a thumb up for the content, subscribe to the channel, and we'll catch you next time. This is Finding Value.